The language of business is the four essential financial statements that describe the financial health of a business, where the numbers tell a story of survival, success, or total disaster. Number 1. Balance sheet, the business health snapshot. Imagine you're looking at a company from the outside. Fancy offices, booming sales, big headlines. But how do you know if it's actually financially strong or just putting on a show? That's where the balance sheet comes in. It reveals what a company owns in assets, what it owes in liabilities, and what's truly theirs in equity. Because in business, looks can be deceiving, but numbers don't lie. The balance sheet shows a snapshot of this data, meaning it shows the asset, liability, equity position of a business at a point in time. Similar to how we as individuals own assets such as a car, a house, cash, owe liabilities such as loans, credit card debt, and have net worth, which is the net of assets minus the debts. Let's look at a real example. Here's the balance sheet of Apple. Let's zoom in. We note that the data is a snapshot as of September 2024. The numbers are in millions. We are looking at the assets section of the balance sheet. Apple has total assets worth a whopping $364.9 billion. The assets include items like cash, inventory, property, equipment, etc. Moving further down in the balance sheet, we get to the liabilities and equity section. We see that total liabilities are about $308 billion. Apple's liabilities include debt, payables that they are due to pay, etc. Looking further down at the shareholder equity section, we see that total shareholder equity is $56.9 billion. The final line is the sum total of liabilities and shareholder equity, which is $364.9 billion. Note that this amount is the same as the total asset value we saw earlier. Why is that? Because the fundamental equation in business numbers is that assets equal the sum total of liabilities and equity. See our balance sheet video for more on this. Number 2, income statement, the story of money making. If a business spends more than it makes, it's a sinking ship. But if it keeps costs under control and revenues flowing, it's a money-making machine. This is what the income statement tells us. It tells us the story of how a business makes and spends money over time. For example, if you have a lemonade stand, the income statement will tell you how much revenue you made. Let's say you made $1,000 from selling lemonade. How much did the business spend in expenses? Let's say you spent $400 on lemons, sugar, and cups. Finally, it shows the net amount you earned, your net income, which in this case is $600. Let's look at a real example of Uber's income statement. The numbers are in millions. Data is provided for 3 years, 2022, 2023, and 2024. We see that revenue is noted at the top. In 2022, revenue was $31.8 billion. In 2024, it went up to $43.9 billion. Below revenue, the various costs and expenses are noted, which include operation and support costs, sales and marketing costs, etc. Further below, we see the net income earned by Uber, which went from a loss of $9.1 billion in 2022 to a positive earning of $9.8 billion in 2024. Learn more with our income statement video. Next up is number 3, the cash flow statement. A company can be profitable on paper but still go bankrupt. How? Because profits don't pay the bills, cash does. That's why the cash flow statement is the reality check that every business needs. It tracks every dollar that moves in and out over a period of time. It breaks down cash movements into 3 sections. Operating cash flow, meaning how the money is moving around in business activities, like selling lemonade. Investing cash flow, including investments into the business, like buying a lemonade stand. Financing cash flow, meaning money movements in financing activities, like borrowing money to buy the lemonade supplies. Let's see a real example of the cash flow statement of coffee giant Starbucks. In the top section, we note that the numbers are in millions and are shown for the years 2024 going backwards till 2022. First, we see the operating activities listed, along with respective cash flows. Then there are investing cash flows, followed by financing cash flows. The net cash flow for each year is shown at the bottom. In 2024, it was $3.2 billion, and in 2022, it was $2.8 billion. Watch our cash flow statement video for more. Finally, number 4, the equity statement. Ever wonder how much of a company actually belongs to its shareholders? The equity statement tells you exactly that. It's the owner's report card. It shows how much of the company's net value belongs to the owners, and how the value has been changing over time. It tracks the starting equity, meaning what the owners had at the start of a given time period. Equity changes such as income earned, dividends paid, etc. The ending equity, meaning what's left for the owners at the end. Let's look at a real example. The equity statement of Netflix. Zooming in, we see that the numbers here are in thousands, not millions. The equity total is noted for years 2021 through 2024 in the far-right column called Total Stockholders' Equity. Equity value has been increasing from $15 billion in 2021 to $24 billion in 2024. For more on equity statements, watch our video on the topic. So now you know that financial statements aren't boring documents. They're the health reports of a business, revealing its strengths, weaknesses, and hidden risks. Keep learning with us for more insights into the world of business and money.